Good turnaround Tuesday, Warriors. Who's ready to trade possible reversals? Hello, Ingmar. How are you? AKA Sinatra. Bran, I'll do my best, buddy. My trading warrior brother Bran is here. K-Man's here. Hello, Paul. Tiffany Forbes, welcome to F.A.C.E. You're a new name. I think you'll enjoy being here. You'll learn. Mike, hi, Blake. Ryan Stelios is here. How about that? George, Glenn, Marcus, Tony. Tony's back. Must be something happening when Tony's back. And Bran, how are you? Everyone's in the house. Okay, full strength. All right. I just want to start off with this was a pretty nice little three driver here. Let's see it even better here. So it worked for a day trade, pretty classic. 1, 2, 3. I showed it yesterday before we took out this high. It was good for about 40 handles. We'll see. I mean, we still have to take out this 56.20 at least. 55.75 would be better for the bear case. The two larger three drives, one was here in the Dow, which it's trying to stay underneath the return line. There it is. But threatening a throwover, which is exactly what the banking ETF did, XLF. We're in a throwover here. Okay. So you have to wait for it to be back inside of the formation. And
Hey Dale, good morning. Do you see all the
yeah, hey,
bank earnings out today? There's a lot.
good. Are they good?
Oh yeah, yeah. I mean, they're
Yeah.
they're they're great. I mean, we had Bank of America, Morgan Stanley, Charles Schwab out this morning, PNC. Yeah, all beats across the
All
board.
beats.
hmm
Okay, so the XLF is up a little in pre-market, I think about 20 cents. Um, okay, so the gold signal on the Dow is you need a red candle here, all right? To make sure you don't have a throwover, you need a red candle. That would be the gold signal with stops over yesterday or today's high, whichever is higher. So why don't we get to currency action? So the dollar is trying. It's pretty weak rally so far. I thought that we could have more, but we still could. 104.80 to 105. Some type of retrace of this. Maybe Blake will get his 110 sales off before the ECB if they push it here.
I've got
And
orders lined all the way up the market, buddy.
okay, and this is significant. Looks like we're going to try and close under 420 in the 10-year. So I don't know if you guys saw Bernanke, Paul yesterday, but he was pretty happy. He was cracking jokes and seems pretty relaxed, and things couldn't be any better. So when things can't get any better, you know what that means.
Think he had a gummy.
Did he? Okay.
Yep.
Um, Canada, I didn't sell any more here, but getting close to the level, this may be it. But I think the Dixie might have a little bit more left in it, so I'm holding off. Maybe we could trade 720. We'll see. And the yen is trying to hold this major trend line. And this looks like a little three, doesn't it? 1, 2, 3. We'll see if it could do anything. The daily, I mean, it's sitting right on the ledge. So I think that's about it. When I bring in the team, I know that Blake's looking to sell euro. Ryan, good morning. How are you? Are you in the same camp looking to sell euro? And at what
Morning, Dale.
levels? Morning, buddy.
Yeah, I might have a little tap upstairs. Might be rude not to give the big figure a little go up at 110. we shall see what the driver is behind it. Got retail sales coming up, which could be important, obviously. So yeah, it's the trend continues. You've got to get through this, really get through this 109 sort of 10-15 area first. And while we
Okay.
don't do that, it's just it's looking a little bit stretched right now.
Okay. Any thoughts on anything else on the board? When I brought up that maybe the yen could get back to 160, you didn't think it had that much juice left in it. You still feel
No, I
that
think
way?
it's had the rug pulled out from under it. So if it's going to go back there, it's probably going to be a bit of a climber. But again, it could start to edge. If we get good retail sales today, then we might see that edging up. We had another headline, people counting the beans between the Bank of Japan accounts, and that they intervened on Friday as well for another 2.1 trillion. So that seems to be they wanted to give it just a little bit of a nudge to say we're still here.
Okay.
Whether that's their changing tack, but yeah, the Looney's looking interesting with that Canadian data. We're pricing 80% chance of a cut next week. So softer data will either cement that. So it could have turned this one into a bit of a dip buy if that CPI data's hotter and we see the Looney dipping back, because it won't move the needle that much unless it's a real barnstorming hot number. And then we got this cable up at 130. Barriers in play up at the big figure, which smelt a bit like it yesterday. And again, a big week of data tomorrow: inflation, Thursday jobs and wages, and Friday retail sales. So yeah, lots to pick through this week.
A little change of character. Aussies kind of looking like the relative weakness here today. Any reason?
No, I think we've had another move in the Kiwi as well, and we got their inflation data coming. So we're seeing Aussie Kiwi, still up near the highs. But I think it's just a little bit of for Aussie dollar. It's just a little bit of a pullback. I know Blake mentioned it in the chat room, but you need to keep an eye on 10 years US 10s. We're still undecided around that 420 level, and I think this is going to be key. Said it last week. If we push away one side or the other, that's where the dollar's going to follow.
Okay, so 10-year threatening a breakdown into the data. Gold silver ratio is still holding up. Looks like it wants to go. I mean, maybe back to here. I'm not bullish, although silver's really a different looking market. Gold actually runs into this little return line up here around 47, 24.50-ish at new highs, and just saying that we're not going to be, I don't think, confirming a high $7 higher. And silver, I still think you could be patient. 30 is going to be a big level for silver if it takes it out. So that's what I have coming into today, and just really keeping an eye on this redrive. Also, yeah, one other thing, NVIDIA, even with the market rallying yesterday, so it's up about 15 cents on the opening, it still could, sell off here if we get any kind of market weakness. And this 115, 110 level is going to be pretty important, because if this fails, takes out the 50-day and stays underneath it, it really opens the door for 75.
Dale, there's still a couple of earnings from a couple of chip makers this week, big ones too. So
yeah,
that I think they're going to be following there. It's a group. I think it's a group effort. Instead of following just NVIDIA, take a look at like what's happening in, some of the other earnings this week. We got Taiwan Semi, ASML, some big earnings coming out this week in that sector.
okay,
But
well, here's
if you
the
don't,
semis right here. Okay.
yeah.
So
if you don't mind, I'm
two
gonna go
drives.
ahead and get us ready for the data.
Yeah, go ahead. Two
All
drives
right.
in the semis. Go ahead.
All right, guys. And thank you, Dale. And you know, we haven't heard from K-Man yet this morning. I'm gonna bring him in just a moment. When we're talking about the S&P, Dale, this is a big level, in my opinion, where we're trading at, mostly because it's a monthly, you know, 161% extension or weekly 161% extension. And if you guys, you know, didn't, you know, or haven't seen it, just understand that we are really, that's probably why we're getting a lot of two-way action around here. And as you can see, we've been straight up for, you know, for the last couple of months, but you know, we are also challenging channel resistance. So not only are we on the 161% extension, but also at the major channel resistance as well. So, you know, there is obviously, you know, I think you can trade both directions, but I'm not really sure what's gonna break us out higher. I don't know if it's gonna be, if it's data, or maybe it's just because earnings continue to come out, and you know, you look throughout the course of the, just even today, you know, earnings continue to be strong. So, you know, it's hard to see the market, you know, peak when earnings are still looking pretty good. But you know, you were talking a little bit about gold, Dale. The one thing that, you know, we should be, you know, respecting is that gold is at all-time highs. We're in a very strong uptrend, and the pullbacks have been very minimal. So it does seem like to me the next stop is going to be 2,500. And you know, one of the things that I tweeted out this morning is that it feels like that gold is sniffing out a weak retail sales number. Matter of fact, it does feel like the whole market is leaning into the idea that we are going to see some weak consumer data. And you know, this is a chart that we brought yesterday. If we see a breakdown in the dollar index, it's a Gartley pattern that'll take us to the 127% extension around the 103.20 level. That would be a major ascending trend line test as well, which I think, and it's dotted here. You can see it in the dotted chart. That should find us a lot of support, and it's also a 78% retracement of the March to April high. 78% retracement, 127% extension of the last move higher, and ascending trend line. I believe this is where your bullish reaction is going to be from in the dollar, which would in essence put the euro up at 110. And that's where you know, I get the 110 level of looking to short. And if you guys are in the ForexAnalytix community, these are the conversations that we are having here, as you can read. And I'm just going to give you guys a freebie here that, you know, this has been, I'm reiterating what I said on the week ahead video. I'm looking for a short anywhere up to the 110 level in the euro, because that's been the plan, you know, since this weekend. I've been really hoping for a move up there. The biggest issue that I see at the moment, and I want to get K-Man's, since we haven't heard from K-Man this morning, I want to get his opinion here. I feel that the dollar is everybody's leaning into it. You can see the dollar, you know, coming under pressure against the euro. You got sterling, you know, trading up towards 130, which, by the way, Gartley resistance is at 130.20 in sterling. You just feel like the dollar is just being, you know, punished into this. And look at the dollar yen. I mean, we're still holding, you know, that 157, you know, channel support. It's a 618 retracement, big confluence. Again, if you watch the week ahead video, you know how important that 157.40 level is to me, which is held even yesterday on the dip below there following Powell. Buyers stepped in right there yesterday. So, K-Man, how do you feel about this dollar going into the U.S. retail sales? Now we'll talk about the Canadian data here in a second, and I'll go back to you, Ryan. But what do you think?
I think the dollar looks different versus every other currency. If you look at the Swiss is a bit weak. If you look at the yen remains a bit weak. Then the other Canadian dollar remains a bit weak. And even Aussie and Kiwi came down. So it's a different dollar versus whatever you look at to me. But but yields are coming off, so that's a factor behind it. As far as gold is concerned, I don't think it is anything to do with the retail sales, but Asia buying again overnight. And Gold is now englobing all the uncertainties in what is going on in all the rest, whether it be geopolitics, yields coming down, expected rate cuts coming up, perhaps even, I don't know, Trump versus two somewhere in there, but that's another uncertainty. And I think that's what's happening in gold. And also the price action, of course. The technical price action is extremely supportive still. We had that look below 2,400 and it's got bought again. So all of this tells me that well, I mean, it's still my view that we are going to have a 2,500 print quite soon, which will be a psychological level, but I think the next real level, yeah, you got 2490s, but then it's 25.5 in my opinion. Providing that 2380 figure holds right now. That for gold. For the rest, the dollar, yeah. A lot can happen because just as a continuation, perhaps the retail sales, if they're weak, could weigh on the dollar. But then we've got big numbers coming out for other stuff as well. To start with the Canadian CPI, tonight we have the Kiwi CPI. Tomorrow we have UK inflation data. The day after, Aussie employment. A lot can change, you know, over the next 24, 36 hours as well. So I'm selectively short dollars, but I've reduced a little bit of it. So because I want to see each and every currency or instrument versus dollar separately.
And you know, thank you, K-Man, for that update. If you are in the ForexAnalytix chat room, I'm just going to take you over to the trades room really quick, where you can see as K-Man's talking about, you know, getting filled on different positions. You can see where I just pulled off half of my dollar Canadian longs from being long at 136.05. And you know, I'm going to add back to it above 137 on a you know, a move following you know, the retail sales and Canadian CPI. Because if you get a double whammy there, you get, like, let's say strong US retail sales, which you guys know betting against the US consumer is always difficult. I mean, yes, there's been some inconsistencies as far as expectations go, but the US consumer will spend until they have to, you know, until they're done spending their, you know, mother's, brothers, uncles, monkeys credit card, and then they're going to stop spending money. And so if the US consumer still, you know, comes out swinging and Canadian, you know, CPI data is weak, that dollar CAD is going to rip higher. I mean, you look at it, and we had a really big reaction from the 200 DMA this week, 136. You guys know that's huge support. That's why I ended up turning around and getting long instead of being on the short side. And I think, Ryan, you were playing it to the long side. So Ryan, I want to get your opinions on Canadian CPI here, because we just rejected the 618 retracement to a T this morning. That's why I pulled some of mine off, because I got up this morning and I saw that we rejected it. What are your thoughts here going into the Canadian CPI?
Well, as I said a moment ago, we're pricing 80% chance of them cutting next week. This data is either going to make that near 100%, or it's going to knock it back a bit. I think if it does knock it back, it won't change it too much. So as I said, if you get strong CPI data, that's probably right now, intraday, a dip to buy. But like you say, it's we've got the US data as well. So you might, if you want just pure CAD exposure, look at some of the crosses, maybe Euro CAD or Aussie CAD or something like that, rather than getting caught up in the crosswinds between retails and CPI.
Yeah, this is almost like a jobs Friday with the Canadian, when we get, you know, both the Canadian and US jobs report on the same day. Today's going to be one of those days, so that's a great point. You know, as Dale mentioned a little bit earlier, we do have a full house, and from what I understand, Stelios is here. You know, are you done sailing today? I mean,
hello,
you know,
it's so hot here.
The sea's too choppy for you to be sailing the GNC right now. What's going on, Stelios? Good to see you.
So warm. Hello, everybody.
So
by the way,
warm.
Dale, you've been hanging out with me too much. You called Powell Bernanke. Anyway.
Oh, yeah. Just wait still.
Yeah.
So
So
you're my age.
I wasn't here yesterday. You talked about Trump and everything. I think there's a lot of things happening right now. Of course, my views are more kind of medium term, not what's going to happen today or tomorrow. But I agree with Blake in terms of the dollar. I think it's been sold into a little bit in the short term. It is. It could bounce, but then again, the data has been coming very mixed, so we wait for that. But you mentioned gold. Gold, we've been talking about for months, just how incredibly resilient it was over those 2 years of tightening at the fastest pace that we'd seen since, the Babylonian Wars or something. Anyway, so it's been really resilient. It's probably going to close at an all-time high today. And that to me is bullish in any way you look at it.
Yeah. An all-time high close is usually bullish. I would agree.
Yes, yeah, of course.
Right?
Of course, many things can happen, but I think that the Fed will be okay. July cut is out of the question. I think Powell yesterday kind of alluded to that, but September is on the cards. And then if they start cutting, how quickly do they cut? Because the market's pricing a very shallow cutting cycle. I think it's going to be either no cuts or it's going to be loads of cuts. So this is something to be aware of, and so I'm still bullish metals. I mean, it goes without saying. I still have my longs and everything. Equities and the S&P is a very interesting thing because again, I see no technical evidence of any kind of bearishness or non-bullishness. So I think they're going higher. There has to be a catalyst for equities to turn lower. Interestingly, a friend of mine pulled up something that DJ Vance, the next, well, if Trump becomes president, he's going to be his vice president, something he said in April. And he said, devaluing the dollar is a scary word, but what it really means that the American exports become cheaper and it's important to
Right.
be exporting and all that. So he is all pro
Oh, yeah.
dollar. Of
Mhm.
course, what does a vice president do? It's really the president that
Nothing.
calls the shots, but it's something that's out there. And I think that's, we are long overdue for a correction in equities, but with everything that's happening, and if the dollar continues to weaken, I don't see a reversal anytime yet.
And
Can I
that's
put out a question to the team? We're having this big move down in yields, and at the same time, there's a steepening happening. Everyone's view on the fact that with rates coming down, we're starting to move towards non-inversion in yields. I always read that's the most dangerous time for the market is not during the inversion, but when it comes out of it. Any comments?
And it's along the same lines when the market's more worried when a cut comes versus because the market is starting to price in, oh, here's the economy is weakening, Fed's cutting, let's buy, that's when stocks will actually go down. It's the uninversion that gets the attention of a lot of players. I've heard that too. What does the rest of the team say? K-Man, you have any thoughts on that?
It depends what direction you go, because if you get a steepening when central banks are hiking, it would be monstrously positive dollar. But this time it's a different one. We are having steepeners because the Trump side of things will be asking for rate cuts, but then at the same time increase debt quite a bit more, which both sides would do anyway. So this time it's a bit of a different one because we're talking about rate potential and possible and likely rate cuts. So this one and this is exactly how markets are behaving nowadays. Is that and I think the very simple question will be: are we going into a sharp recession or just a slowdown and a soft landing? If you go into a sharp recession, everything is going to turn around. If you continue to land softly, equity markets will still like it. It all depends how your economic development will look like, and that is true for the States, and that will be true for other continents too.
All right. Well, hey, thanks for asking that question, Dale. But I just noticed Grega's here. Grega, real quick, let's get a quick Elliott wave view of how you're feeling about the dollar Canadian, about the US dollar in general before this data comes out. Good morning, Grega.
Hey, good morning. Well, I still think that the dollar has more downside potential. I think that we will break 104. And on the opposite side, I think that Euro, cable, and possibly even Kiwi can offer some interesting opportunities. I see Kiwi coming to the downside into some very nice potential support zone ahead of inflation data. We have some head and shoulders pattern going on as well here. We are now just I'm tracking a right shoulder from June highs. So yes, that could be exactly. So I'm thinking that we are approaching some very interesting levels. I'm also bullish metals, think that there is a lot of more upside potential. Since you mentioned dollar CAD, we are trapped there in very nasty triangle range for a while now. And I don't believe that we will get any kind of a breakouts there if you switch to the daily chart, maybe better. So I don't think that we will go out of this range anytime soon, but would be willing to look for potential turn to the upside once we reach lower levels, around 1.34 maybe. Is the
awesome. And by the way, if you guys are listening to Grega Horvat, he provides all the Elliott wave analysis daily for all 30 instruments on ForexAnalytix. So you want to get his views throughout the course of the week. You just press on the H or the harmonic light on the dashboard, and it takes you over to his, or I'm sorry, the Elliott wave EW light. It takes you over to his charts. So what are your thoughts here about equities? Look, I'm just going to go to S&P because obviously we're at this big 161% extension, channel resistance, blah 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 blah. I mean,
we are definitely in bull run. But I would not be chasing this market up here. I still think that there can be some corrective pullback ahead of elections. But later this year, I just think that this uptrend may resume, but I'm aware of some pullbacks first. We are also seeing VIX at the bottom of this chart, trading and testing some very strong levels on there. So I think that clearly we should be prepared rather than surprised if something goes wrong here.
Yeah, that's good that you pointed out. The VIX is actually breaking out. Now, I don't like looking at chart patterns on VIX, but just the simple fact that we're making higher lows. I was on the trade-off show
for sure.
Yeah, I think buying volatility here is cheap. It's a cheap hedge in the market. So, and you can see we're trying to probe higher. 200 DMA is going to be pretty good resistance, because we get above that, then you know that the market's probably seeing some volatility, and I think that's probably something that Dale's queuing in on as we go into go into the summer, aren't you, Dale?
Yes, sir. Long vol.
All right. So, hey, we are just a few minutes from the data being released. Grega, thank you so much for your views. Ryan, any last minute thoughts before this data comes out? I'm going to actually put the dollar Canadian over on the left side, since we're seeing both Canadian data and U.S. retail sales. But any last minute thoughts here?
Just keep your eyes on that 10-year yield over the US data.
And that's going to be right here on the right-hand side. You can see there's the 10-year yield right there. I'm going to put the S&P right in the middle so we can see instant stock market reaction, see how the market is reacting to the data as it comes out. K-Man, we have less than a minute. Any last second thoughts?
Keep an eye on 130 in the cable. If the numbers are weak, and then gold 24.5.
All right, and Dale, Grega, and Stelios, thank you guys for your commentary a little bit earlier. Data is going to be out in just a few seconds. Remember, if we can get a push above, the 109.20 in the euro, there's got to be some stops above there that could take us to 109.36, which is the long-term 618 retracement. If you guys haven't been following the charts, That's going to be your first key level. Above that, then we start trading towards 110. We'd have to have a pretty weak U.S. Retail sales number to reach for those levels, in my view. But watch this dollar Canadian at 137. We break above that, and
better than expected.
Yeah, and look at the Canadian CPI. That came in month over month, pretty weak. So
retail sales were pretty good.
yeah, I mean it's hard to fade the US consumer, man. This is one of those things where look at the dollar CAD. I mean, this is the one where you start looking at weaker Canadian sales, dollar CAD's pushing, I mean,
that retails is quite strong actually, because the control group, the core sales was up 0.9, so that's taken out all the gases and autos and all the other stuff. So it was up 0.9 versus 0.2 expected. So pretty strong sales, as you said, Blake. Don't bet against the US consumer.
It's hard to bet against the U.S. consumer.
They're borrowing on their credit cards to spend. That's good.
I tell you, I was at my 20-year high school reunion, and we were in the midst of a financial crisis, a housing market crisis, and it was 2010. And again, it was my 20-year high school reunion, and I remember sitting outside with a bunch of people that I went to high school with, and we're sitting out front of a mall that is, in a place in the United States that's just decimated. Home prices have been cut by at least 70%. People just walking out of the stores, not paying their mortgages and letting their homes go into default, but buying the newest iPhone, $200 pair of jeans. They don't care. They're just spending and spending and spending. And that's the US consumer in a nutshell. So hard to bet against them. Anyway, I always tell that story because it's so ridiculous. I remember just looking around going, are you kidding me? Anyway, I want to thank the entire team for being here today. US equities are actually pressing higher on that data. And look at that. I mean, here we go. S&P is, we're going to reach for that channel resistance once again, as the consumer comes in strong and is still spending. So take it for what it's worth. And Dale, I know you have who's here for your interview today?
Dana Lyons.
Oh, Dana Lyons, a good fund manager here to bring you his views in the market. So always good to hear Dana. And I want to thank the entire ForexAnalytix crew for being here. Don't forget, for the month of July, trader funding program. If you're taking advantage of the volatility, you want to get involved in the trader funding program. You want to trade somebody else's money. You don't want to risk your own money. Take advantage of that, and you get a one-on-one consultation with me for this month. So I've actually booked out pretty much a bunch of spots this week that I'm meeting with new traders that are getting involved. So don't miss it this month. With that being said, Ryan, K-Man, Dale, Stelios, and Grega, always great to hear your voice. Thank you guys, and good luck today. I'll see you guys on the morning edge, which is in 45 minutes for ForexAnalytix traders.
Cheers, everybody.
Thank you.
All right. Hey, thank you, team. And Dana, welcome back to F.A.C.E.
Thanks, Dale. Always great to be here.
Yeah, great to have you. We should probably just go to asking you what you're not long. That'd be shorter. We'd be able to,
Let me think about that. That's a tough
yeah,
question.
that's what I mean. So yeah. I know your style, and let's talk about what you're seeing.
To be honest, yeah. So, our niches, we're equity managers,
Yes.
and we are risk managers. So, first and foremost, we have a risk model, a risk overlay that takes a lot of input from market internals, breadth, that type of thing that we've been running for decades, really since my father was a pioneer in that. What used to be called market timing, then active management, back since the 70s. So
your dad was in the biz, huh?
Oh yeah. And
that's interesting.
He started with Merrill Lynch back in the late 60s, just in time to hit the several bear markets in the 70s. And what he found out, what he realized pretty quickly was you have to be on the right side of the market and find a way to be on the right side of the market because Merrill Lynch didn't want him to be in and out. They wanted to be him and his clients to be in full time. But once you get bagged for a couple 50% losses, then you figure out a different way. So what we figured out was we want to be substantially long and aggressive when most of the stocks in the market are going up. Studies have shown about 70 to 80% of the direction of a stock is dictated by the direction of the overall market. So when the overall market's going higher, meaning a lot of participation, good breadth, then we want to be aggressively long, and vice versa. When the broad market is dropping, then we want to be defensive. And we saw some whiplash since we topped in April.
Yeah, I wanted to ask you, so you're probably going to get to it, especially with what happened last week with the Russell coming out of the chute, gapping up, and the rotation coming out of some of the Mag 7. And, everyone's saying right now, I want your take on it. The problem with the market is it was too concentrated, too narrow.
Yeah,
And
well,
now
right into the move to April. This is the value line geometric, which tracks the median stock in the market. And that the first quarter rally was really broad. It wasn't just the mega caps. Broad rally. Then last quarter we saw some whiplash, and really in the move from May, when you saw the mega caps and the S&P continue higher, we saw the broad market really start lagging, including a lot of the indicators that we look, some of our proprietary breadth stuff really started lagging and gave us some pause as to the durability of those new highs this time in the large caps, unlike what we saw in the first quarter. That's changed over the last week or so. We saw that Thursday move. I think it was Thursday. That gap, and I didn't know if it was going to be something durable, but it's continued. And here we're looking at the NYSE AD line. So every major top in the history of the S&P has coincided with a divergence in the NYSE advanced decline line. So that move we saw into June, the new highs we saw into June and even early July, we did not see a new high in the AD line. That's changed over the last week. You can see it broke out. Now we're seeing new highs there. So we've seen a vast improvement in breadth. It's not just the mega caps. Here's XLG, the mega cap, which continues higher. But we've seen a vast improvement in the internals, which to us means a lot. We were hedged. Here's the equal 8 S&P poised to break out. We were hedged in some of these lagging areas like the Russell, like Europe, which was lagging thanks to France. That has turned around as well. Here's the stock 600 in Europe, which has rebounded, also looks poised to potentially break above that 127 and join the party again. So the internals of breadth is back on the right side. We've dropped our hedges. And to your question, what are we not long? Nothing. We're not short anything right now. Back in pretty much full on bullish mode. Still legging into some further positions, further allocations, but hedges are off right now. I guess
I'm curious, what were you using for hedges?
For hedges, we use mostly ETFs for our clients. So we use our inverse ETFs, and they're not buy and hold instruments, but our philosophy, our methodology is not a buy and hold one anyway. So we use the inverse ETFs, whether it's inverse Russell. We had a couple inverse international funds, the IFA. Europe. We were short the semiconductors off of that the major top that we saw briefly before quickly realizing that was wrong as well. So, but those are the instruments that we use. The only hedge we have right now, I heard you guys
Down
talking
VIX.
about the VIX,
Yeah.
was this little pop yesterday above the 50-day.
Yeah.
So we are long the VIX, which is kind of our only hedge right now. That opens up
Okay.
upside to the mid 14s anyway right now. But as far as equity, sectors, we're not short anything right now.
Okay. Do you think, Jamie, I'm sorry, do you think that we could have Dana, we have a hook here that although, the market was performing like a superstar with narrowing breadth, is the broadening out, could we broaden out and yet have those averages that are broadening out not be able to carry the day if what people are coming out of, like the Mag 7, they're what led the market there.
Yeah.
Can the Russell carry the day if we have pressure in mega cap?
Right now, it looks like there's rotation out of that. And I also heard you guys talking about, maybe a technical reason why we pause here in or rotate out of some of that mag stuff, some of the large caps, uh, the most consequential fib extension levels in the market here are that 161
Yeah.
extension from the 2022 on the S&P, which we ran right into. And it's all the large cap growth
Yeah.
stuff that's hitting those extensions. And it's not just the S&P. We got the NASDAQ 100 hitting to a
2.61.
T. Yeah,
Yeah.
the 161. You got the Russell 1000 growth hitting right off of there. So you've got here's the 161. You've got a good technical reason for some money to come out of there, at least temporarily.
Right.
But the fact that we see a resurgence in breadth in the
Okay.
broader market is, to us, a telling sign that money still wants to go somewhere
Yeah.
within the equity market. And how durable, how long lasting that will be, I don't know. But we operate mostly in what we call the intermediate term time frame, which is 2 to 6 months. So over that time frame, we're a lot more constructive now than we were maybe a couple weeks ago. Here's the semiconductor ETF SMH, which also ran into that
Diverging.
261 extension. So gives you a reason to maybe suspect a little bit of a pause or slowing down in those former leaders, but enough sectors are starting to work again, including international markets, that there are enough places to rotate into attractive places that I think this thing can continue here, at least in the near term.
Okay. Any comment on the fact that like the 10-year would be a breakdown under 420? I've been looking, I think we could trade well under 4. And at the same time, we're coming out of the inversion and beginning to steepen a little bit. What does that mean to you?
Yeah, well, first, just technically, around that 4% is a massive level for yields. We think we're of the mind that yields hit
That was it.
a
Yeah.
long-term bottom during COVID. That 60-year cycle of interest rates probably bottomed then. So that means we're moving higher for, the next several decades.
But could we go to 3% first before we
Yeah,
have another wave?
of course. I mean, you have all these huge, what doesn't look huge, but some of these moves are huge within that longer term trend. So nothing moves in a
Yeah.
straight line. You'd see that first major fib retracement level from the peak in the early 80s, as well as some other junctures along the way, is around that 4% level. So that's
Yeah.
the line in the sand for us right now. Really, maybe that 23 retracement from the bottom to uh, the top last fall is around 390. So I think we're gearing up for a major test around 390. And to your point, I think we could certainly we've been buying bonds. We're long 30 and
TLT.
10-year. Yeah.
Okay.
Well,
Shorter on the curve.
leverage
10-year.
version of it. No, 30 and the 10-year.
Okay.
390, I think is we're gearing up for a big test there.
Yeah.
I think that that level could easily give way, and then
Yeah.
now we're looking at about 3.25 would be
Yeah.
probably the next major test. But yeah, I'm
So
of
when
that
does the
mindset.
market, so the market's going to celebrate this, right? And lower yields, risk on,
I would
etc.
I would believe so, unless
Okay,
it's
when's it
due
going to,
to
when
some
would it wake
catastrophic
up
event.
when will it wake up to the fact that rates are coming down because there's economic weakness? If we had bad earnings?
Uh, Yeah, some fundamental reason for that, some shocking fundamental catalyst, I guess, which
Yeah.
we don't even include in our models because
Yeah.
you can get such a disparity or divergence between economic and market factors that it doesn't move the needle for us. You could be following fundamental factors and be wrong in the equity market for years on end, and that does no help for us or for our clients. So
Yeah,
that certainly could lead. It would be significant lead time where you're scratching your head asking, well, why are yields so weak? Before
yeah.
eventually you figure it out. It could be months and months down the road. So I don't worry about that. As you know, we worry about price action and
Right.
actual objective market data that's coming from within. So we're happy to be long bonds and stocks, at least as long as they're going in the right direction.
You made a great call 3 months ago when people were very worried about the Nikkei. And even though European bourses haven't yet made new highs, the Nikkei skied again. So that was a great call, Dana.
Yeah, well, Japan.
Are you surprised I remember?
Well, no, you're the OG, so I'm never surprised by your calls, and you're more accurate than most anyone that I know. So never
But I
surprised
remember
by.
your stuff. Yeah, so that
Okay,
was a
well, I appreciate that.
great call.
Well, the Nikkei, yeah, people are concerned that we're hitting those all-time highs, which, by the way, happened pretty quickly because not many people were on the Nikkei until maybe over the last year or so when
Right.
we're most of the way off those lows. But I think the Nikkei's got a lot more fuel to it.
Okay.
Certainly, it could use some digestion for a while, but the thing that's kept us mostly in Japan has been the hedged equity fund. So this is DXJ, which hedges, of course, the yen,
Yeah.
which is another way to
Wow.
play Japanese equities. And there's almost been not even a pause in this
Yeah.
move. So we've been in here for a couple of years and still skyrocketing higher, which tells us a lot, I think, about the yen without directly looking at the yen. So this is another good way to play Japanese equities as long as this trend is higher, which it is. It's hard to chase, obviously, something when it's so extended, but obviously the trend is still higher, and
I'd be
given
careful. If we get one more high in the end towards 164,
okay,
that's going to complete a pattern up there in the end. So there could be one more hurrah,
yeah,
and maybe you don't want to be hedged on the end. Maybe you find another
gotcha.
way to play
Yeah,
Japan. Just I'm a professional guesser. So anyway, how about the miners? They've actually begun to outperform gold, which I haven't seen in, I don't know, a long time, 5 years, 10 years.
right. It's been a while.
Yeah. So
Um,
do you like it?
we do. We've liked the precious metals complex for some time since it's been we had that massive rally in gold
Yeah,
into 2020, which really and gold really brought it up to the all-time highs from 2011. Since then, moved sideways. I don't have the gold or GLD chart up, but it's really been a massive cup and handle. It looks like
yeah,
forming. So there's a lot of potential fuel left there for
yeah.
further move to new highs. At the same
Well,
time, GDX, that big rally up into 2020, brought it right up to the 61 retracement of that down move. So to your
yeah,
point that it's been lagging, the miner's been lagging the metals for a while. That's certainly been the point, but we've seen some catch up of late,
yeah,
which is
yeah,
always a good sign. It's kind of a miners, as you know, have often been a higher beta move on those metals. So as the metals kind of digest their moves, the miners have been
yeah.
catching up. So we do
They're
like that
printing
potential
money
here.
now.
Yeah, we
Yeah.
do like that. GDX would not take much for it to get back up to that 46
I,
level.
I'm looking
Um,
for 70. If you take the COVID low, Jamie, and draw a line, that chart you have up, it's fine.
yeah.
You draw the line off the COVID low and then the low in 2022,
Okay.
and then you draw the line off the high in 2020 and the high in 2022. It's
Okay.
a symmetrical triangle that measures $40. So breaking out over here, at 38 or 40, it measures 70 back to the highs of 2011.
Honestly, wouldn't surprise me, especially given the magnitude of the breakout we've seen in gold itself. Um, Also silver.
How
Another,
about throwing a weak dollar on top of it?
yeah, I mean,
Are you getting
whenever that
sells there?
happens, I'll
Yeah,
consult you guys as to when that happens. It's been this strong with a strong dollar. I mean, who knows? Which is another reason, we always talk about it. We like to judge everything on its own merits.
yeah,
Watching gold, we would not necessarily have had this allocation to metals and miners.
yeah,
Uh, Watching that, but just the price action in the metals complex itself has been really good. Junior silver miners
yeah,
also have been jumping of late.
yeah,
Another one with major potential still.
yeah.
People toss it aside after, it's always when they people, obviously investors are very impressionable and you get a big run, they get excited, people jump in. That's what causes these the down moves. People jump back out. I think there's a lot of room for the not the gold bugs and the diehards. There's a lot of people from more the general investment community to jump back in. So that could be a
The
lot more
gold
fuel.
bugs, that like physical, a lot of them don't like miners because of recency bias. And I mean, recency being the last 5, 10 years.
Sure.
They're saying, it always underperforms. You have risk of land grabs. The
Right.
jockey is important, who's running the company. You have to do a lot of due diligence. So even gold bugs don't like miners, a lot of them, which
Sure.
I find
And there's,
interesting.
well, I mean, at the end of the day, they are equities as well. So you have the equity component to it. So if the equity market is not in a good place, you could have a great thesis on, why
Right.
metals should be rallying and miners don't follow suit. So that could be very frustrating. So
Yeah.
I
It's
could
all one
understand that.
market.
Sure.
How's the Dow look to you, Dana?
The Dow.
Yeah, the Dow. I know it's
Another
changed.
one. It's yeah, it's whatever. It's a flawed average, people say, but it still trades technically like everything else. It's been lagging as far as the large caps are concerned. There's another one. Okay, the 127 extension's been kind of consolidating there since it peaked at the end of the first quarter, along with a lot of the broad averages. You know, set up now for a breakout. You know, there's another
Maybe.
one. It could easily have an up leg to that 161 extension up around 42,000. Um,
Just
I
looks
don't
like a possible 3 drives to a top for me. You're right. It could blow off.
three
Could blow
drives
off.
from where?
Right there, right at the last section.
From what
No,
low are you
no, it's
talking
a
about?
high, a 3 drive to a high. You have 3 to the right.
Here,
There's 1, there's 2, and now we're in
these
3.
three you talking about?
Yeah,
Okay.
yeah.
I
And
thought you meant a
divergent. Well,
longer
I
term
think
cycle.
Ellioticians might call it an ending diagonal.
Okay.
So, I'm taking a shot here. I need a down candle. What's
This
the
looks
weekly?
more like just a sideways consolidation of this move
Okay.
here to me, which would allow for it would project for one
Yeah,
more move up
42.
here. But I
How
don't
about
know.
the banks? XLF, similar pattern as the Dow.
Similar,
Um,
yeah. Let me pull a couple of them up. Um, that's another one. Why would you be long financials, I guess, with rates coming down? But you know,
oh,
I
okay.
would be
So that is a bear case with rates coming down. You don't want.
well, my point is, why would you fundamentally, if that's what you believe, well, I would be long because they're performing well. A couple within the financial sector that we like.
Okay,
Here's the
broker
broker
dealer.
dealers.
That looks a
IAI
lot
would be your
better.
ticker symbol.
Yeah,
Tested and consolidated here at the end of the first quarter. Those highs from 2022 get a nice breakout here. Insurance we've liked for a long time. Another one consolidating since
yeah,
that peak, but those have been monsters for a while. I could see that continuing higher. XLF, similar to the broker dealers, we did have some digestion for the last 3-4 months. So I would not call it extended here. I would say there's room to run from
okay,
this recent breakout here in XLF as well.
okay. And QQQ, you're just, look at how the Qs look and comparatively,
It's
maybe
it's
there's better bang for the buck elsewhere, and
Yeah,
this
it's
looks
hard.
laid out.
It's hard to be too negative
Yeah,
when prices are hitting new highs every day. The only factor, like I mentioned, on the Nasdaq 100 is hitting right into that 161 extension. So again, some cooling off here
I'd be
would be
careful if it fills that gap. That would mean exhaustion to me. That could be an exhaustion gap.
fills
So
this
just,
gap.
yeah,
Yeah.
it's
Well,
it's
yeah, and that would not surprise me with the 161 extension. This
yeah,
needs to cool off a bit, but the fact that we're seeing other sectors, other equity
yeah,
areas step up
yeah,
in light of that, I think is a very constructive sign. One kind of Hail Mary we've been long for a little bit are these pure value indices, a small and mid cap pure value. Here's the mid cap pure value,
okay,
which yeah, you don't see a lot of small mid cap averages threatening new highs, but this one
yeah,
this is a mid cap pure value RFV.
yeah,
Broke out at the beginning of the year, has been consolidating. And if this one makes another move higher, that could run. This RZV, which is a small cap pure value, obviously looks a lot better, a lot different than the Russell. This in our testing historically is probably one of the best barometers of risk on versus risk off that we've seen. When this one is moving higher, RZV is the ticker symbol. When this is moving higher, it's a very good sign of risk on, and it can really move when it does. So this has been storing up for a small cap average, hanging in
okay,
there nicely. Hasn't really made a move in a couple years, but if this one breaks out and really gets
yeah,
going, we could see a blow off type of a move to the upside before, that major top
okay. Yeah, so
starts
we're
in place.
still in the middle of a melt up
Yeah, and
with your
we
work.
were concerned over the last couple months, given the divergence in the AD line and other breadth indicators. Also, a resurgence over the last couple months, over the last quarter in some of the defensive names. So when you see the utilities start moving
Yeah.
again in the and healthcare and staples, which they did, it's bullish that, but it's also kind of a late cycle type of a move. So that could be a warning sign. But if
Yeah.
you're looking to move into something, a little bit more allocation is something that is not extended, I would look at some of those more defensive names. Here's a healthcare fund, VHT, Vanguard Healthcare, which kind of a cup and handle looking pattern, more of a defensive name, not extended at all. This thing breaks out, it can really run. So that again, that'd be a bullish and bearish sign in the longer term if we see the defensive names start taking over. But while you make some
Great
money
point.
off it in the meantime.
Why don't we wrap it with oil?
Oil, I mean, oil is there are a lot of non-equity assets to me that are kind of just stuck in a range. It's hard to
Okay.
get for me to get too aggressive. It's like the dollar for me. It's
Yeah.
hard for me to get too aggressive, long or short. Here's the GSI crude oil index, which is,
Yeah. It's
I mean,
ranging.
it is middle of the road as it gets. So
Yeah.
for us, I guess, pivot wise, it is above a couple of these
Yeah.
key moving averages. So I would say
Watching that.
benefited out to the upside. We are
Okay.
tend to lean long commodity wise in the longer term. If you're looking longer term,
Just
higher
thinking
highs,
that
higher
oil
lows.
producers may want to squeeze us into the election to get the outcome they want.
Sure.
Just a thought.
Yeah.
So you know what? We went around the board. It didn't take 80 days like the movie. It took 8 minutes pretty much. We had a lot of it covered. So Dana, yeah, you have, since I've been talking about, you have a very good feel and discipline in the market, and you're always have an open mind to seeing what could happen by what kind of signals your stuff is telling you. You have your own proprietary measurements that have been working for you. So how could it work for people that are hearing us now or watch the video later?
Absolutely appreciate it, Dale. And we've learned long ago that when you try to do it on your own intuition
Yeah.
and subjectivity, it's a sure path to failure. So we figured out the market's a lot smarter than us. So we're going to listen to what the market data is telling us, and we try to keep it objective and quantitative. So that's helped us a lot. Our main, as you asked, our main business is a registered investment advisory, J Lyons Fund Management, where we do client management. We also started this trading service a couple of years ago, the Lion's Share, for folks that want to follow along with our thoughts and our models, but want to pull the levers themselves. The Lion's Share is the name of our trading service. We give you a daily update on what we're looking at, as well as sending out alerts of all the trades that we're making. It's up to you to pull the levers, but good way of following what we're actually doing if you don't want to be a managed client. So you can find us here at lionsharepro.com. Like I said, we also have management service. You can find, I still call it Twitter. Find us on Twitter at J Lyons Fund Management, right there. And always a pleasure being on, Dale. This is one of
It's
the
a
best
great.
shows that I do, and you've got a wealth of knowledge, and your listeners would be very, very wise to follow your lead and those of your fellow commentators.
All right. Well, I appreciate that, Dana. And to the left of the screen, you're showing where I lived when I went back to trade, Marina City.
Right. You mentioned that.
I don't know I forgot what floor I was on, but I didn't jump. Although it was New Year's Eve, and I called the airport asking to go anywhere warm, and I couldn't get out.
Well, that's
Anyway,
why a lot of people leave Chicago.
anyway, you know what, guys? Diversify away from yourself, because we all know, especially for discretionary traders, that we all have our runs, and to diversify away from yourself could give you balance when you're going through those periods. So check Dana out. I think his work is elite, and he has the right temperament for doing this. A lot of people don't. So thank you, my trading warrior brother. Appreciate you.
Always a pleasure. Thank you, Dale.
We'll talk in the fall and see if some of these parabolas change their shape a little bit.
It'll be interesting.
It sure, yeah. We're definitely cursed to live in interesting times.
Yeah,
All right.
indeed. All right, my
Take it
brother.
easy,
Take care.
Take you too, Dana. Dana Lyons, everybody. Find him on X at J Lyons Management. Check him out. Dana's very good. And that's a wrap. You could join the team in 10 minutes on the Morning Edge. Thank you, Laura. Glad you enjoyed. Marcus, you too. Remember, don't just count your pips, count your blessings. Have a good turnaround Tuesday, and we'll see you tomorrow. Good hunting. I believe I have Pedro da Costa tomorrow. Looking forward to talking to him because he recently did an interview with Sheila Bear, and Sheila saw a lot of things coming before the markets did. So it should be a great interview. See you guys tomorrow. Adios. Thanks, Dana.
You got it, buddy. Take